Hello, ladies and gentlemen, and welcome to the 15th episode of the Sydney Contrarian. And this one is going to be part of a multi-episode series called A Truly First World Problem. Now, why have I chosen this title? The reason is because I've realized that in our community, we are indeed facing one of the biggest problems, which is that of arrogant ignorance. What do I mean by arrogant ignorance? It is that we think we know a lot of things about our world because, for example, we watch the news, we read the newspapers, we troll through social media, we talk with our friends, and we think we've got the right sources of information. But do we really have the right knowledge? There's a very big difference between knowledge and knowing what is true. Now, some of us will probably think we're doing pretty well for ourselves. We might have a family, we are paying off a mortgage, got a job, we pay our bills, got our kids in school, maybe one of them or both of them or all of them are almost done and they're out working. If you're a student, if you're a young person, you might think you're doing pretty well for yourself because you've got yourself a job or you're in the right degree program that you wanted to when you finish your high school certificate or leaving certificate. And you've got a car, got your partner, etc., etc. But the thing is, what exactly are we missing? Have you noticed that some things are not quite right in the way you live? Now, on one hand, we might feel that there's an increasing burden for us to be busy with our work and that we better save up faster and maybe get a mortgage earlier in case we miss the boat. As well as that, we might also sense that something isn't quite right. What else is there that's not quite right? We watch on the news that our politicians are becoming more and more dishonest. They're caught lying. They're actually hypocrites. So on one hand, they say they support a particular policy, but then later on, you actually realize that behind the scenes in their own private life, they're doing the very opposite. We've seen that regardless of whether it's on the typical political conservatives or the liberal progressives, people who just basically say what the voters want, get the votes, get the job, and then they turn around and they live a self-serving lifestyle. Now, that shouldn't actually come as a surprise to any of you if you think more carefully about who these people are. And the reason why I say this is because they do indeed live in a very different society than we do. Now, some of you will probably say come on, the Sydney Contrarian, you're now going really into conspiracy theory territory. Well, look, these two words, conspiracy theory, that's just two empty words to shut down one's ability to go and search for the truth. I mean, we now have open information on the internet, and quite often you can go and search for things for yourself. And the reason why I bring this up is because what I'm going to say in today's episode is not so much to tell you what is, but is to actually provide you with starting point to do some investigation on your own. And what I'm going to start off with today is about the global financial system and how it's massively fraudulent. So most of you would think that you've got money in your wallet, right? Go on, grab your wallet and tell me what money is. I'm almost certain that the majority of us would think money is just right, the banknotes we've got, like the $50 note, $20 note, or the coins like the 50 cent, 20 cent, 5 cent pieces, etc. Wrong. Absolutely wrong. What money is, it ain't cryptocurrencies either. If you're saying, oh, well, fine, I got some Bitcoin. No, that's not money either. That's a currency. And I've just given a clue away. What you have, most of you, are currency. And there's a very big difference between money and currency. And if you watch my previous episodes and you've also listened to Mike Maloney's Hidden Secrets of Money, you would know exactly what I was talking about, so you would have actually rolled your eyes and go, oh yeah, Brian's on that path again. Right. The thing is, most of us are saving using the wrong mode of saving. We are putting currency into a bank, and the bank pays us interest, and we go, well, all right, the bank pays me like, what, 1.752% interest? That should be all right, right? No. Also, that's an inconvenient truth. If you roll back the clock 10 years ago, and you look at the online savings account, most banks would actually pay you about 5.5% to even 7% on your online savings account. That's actually very low risk at the same time. Nowadays, these bank accounts pay about 2%, maybe 3% if you're lucky. And you would say, well, all right, but then borrowing is cheaper, right? Yeah, that's true. But here's the missing link. Banks charge us 3 to maybe 2 to 3 at least, or even 4% more than our savings when we borrow from them. In a mortgage, that is. Or a personal loan or a business loan, it will be much higher. What they actually haven't told you about is that they actually make much more, not just simply because they earn 3 to 4% more than they pay you, but it's also because of the power of compound interest. Now, it's actually not that hard to sit down, get a piece of paper, and go and say, calculate how much does $1,000 invested at 5% become after 10 years, and compare that with how much $1,000 become after 10 years at 1.75%. And the difference is quite significant if you look at the proportion of what is interest relative to what you have put in. And that is actually the crux of the problem, at least the financial system, from a personal sense. It's that banks have actually become a significant profit-generating business, while at the same time, we have actually been swindled right underneath our eyes, and it's actually barefaced daylight robbery. Now, how does that relate to what I was saying earlier on about arrogant ignorance? Is that most of us would go, well, not big deal, like, it is what it is. But it's not. It doesn't have to be. You actually only needed maybe year 7, year 8, year 9 mathematics to work out something is actually quite wrong. And it manifests itself in terms of the fact that most households in Australia nowadays, and also around the developed world, are now increasingly relying on dual income in order to support their family. Or alternatively, people, instead of being able to save for maybe 5 or 6 years out of, once they're out of school, whether it's high school or university, and they go and buy a house. And most people would back then be able to put down at least 30%, if not half, the cost of the house in order to get it. And nowadays, it's actually people, rather than wanting to save because the interest rate's so low, they actually go and borrow ASAP, and they only have about 10% down payment, and if they're lucky, maybe just over 20-25%. What we actually see in this case is that the banks actually are winning both ways. They are able to earn longer periods of interest off us, even though it's a lower amount because of compound interest, and being higher than 3% compound interest, you actually reap the benefits of the power compound interest. But when we're saving up at below 3%, we're not actually able to leverage much of that compound interest power. Furthermore, because more people are borrowing, it's actually causing the asset prices to go up, because as people borrow more and they chase the same amount of houses, even though you could argue that they're building more apartments and houses these days, there's definitely much more borrowing going on than the amount of properties that are available. Couple that with lower income growth relative to the growth of property prices and general price levels, people are actually relying increasingly on banks. So they're winning there quite easily. Now, how could this system work? And what I am actually adding value in this episode, like the previous parts that I've just talked about, you could actually find snippets of that from my previous episodes. But what I actually want to go back to is that the fraud of the global financial system is in the fiat currency system. Now, if you go back to the Great Depression in 1929, that was actually not just the Great Depression. It really is one of the many booms and bust cycles that occurred in the world, which gave greater power to the central banks around the world. Well, with the Federal Reserve being set up in 1913, you actually had a private corporation, not a government corporation, mind you, that is in charge of the currency system. So firstly, that occurred, and then in 1929, you had the Great Depression, and then in 1933, Franklin Delano Roosevelt, President of the United States, confiscated the gold from his U.S. citizens, and then in return, also devalued the U.S. currency and created, by 1944, after near the end of World War II, the Bretton Woods system, or the gold standard. What they had in there was the currencies of all the nations of the world would be pegged against the price of gold, and you actually have to have the gold in order to generate the currency, and therefore a more productive country would be able to get more of the gold, and then the currency would be worth more. But America had a unique case where they had the military power, but they were also involving themselves in many wars in order to ensure that the military power was enough and the influence around the world to impose this artificial financial system would continue. But they were starting to actually run down their gold reserves. And by 1971, they were unable to maintain this particular system any longer. So on the 15th of August 1971, President Nixon decided to close the exchange between the US dollar and gold, and then it put the world into a floating currency system, meaning that the currencies of each nation are now relative to each other rather than having gold as a backing. To keep this going, though, America needed to ensure that other countries would use the US currency instead of going back to gold, and that meant every nation had to have a reason to do so. So US actually went into an agreement, I think in 1972, with Saudi Arabia to set up what they call a petrodollar system, whereby Saudi Arabia would guarantee that the American dollar would be the reserve currency in the world, as in everyone has to use that currency because every country has to buy oil or buy or sell oil in US dollars. In return, the US guaranteed the Saudi Arabian royal family would be safe. Now, how does that lead to a problem in the financial system? is without a standard, America would no longer be required to pay off its debts. It's almost like having a credit card that does not have a credit limit, because everyone believes that as long as you have to buy oil and America and Saudi Arabia agree upon that agreement to get this arrangement going, everyone's going to be spending US dollars, so we're not going to have to worry about how the US economy is going to thrive. But as the government borrowed more, and in order to borrow out of nowhere, like in order to borrow but without having the means to borrow, the US had the unique position that they could print their own currency. What they mean by printing their own currency is that the Federal Reserve could just make loans to the US government, and the US government guarantees the Federal Reserve that they will pay back the debt with taxpayers' money. And there really was no backing, because as we said, there's already no exchange window between gold and the US dollar. So when you have currency being generated out of thin air, basically, initially it looks like a system that might work, because the government might initially have the best intention not to borrow without discipline. But as time passed, you will notice the government will end up borrowing more, because simply by human nature you seek the path of least resistance. But the productivity of the economy, of the US economy, could not actually catch up with the amount of currency that's been generated. And similarly around the world, as the US is able to generate more cash, and they can go and buy the goods and services of other countries and import it, other countries are going to initially be able to produce more, because initially they are paid a higher amount, so it encourages workers to be more productive and stay back at work to earn more. But eventually there is a limit to human productivity, and even machinery, like there is a limit in terms of how much they can produce in 24 hours a day. So you then have the problem of inflation. Inflation now in economics is measured by the increasing price levels. But the problem with that is it's too simplistic. It's only looking at superficial, what's on the surface. But what inflation really should mean is the excess in the growth of currency, how much is actually available in purchasing goods and services, relative to the growth of goods and services and the general global productivity. So between 1971 to 1980, we actually saw runaway inflation in most of the world's economic system. And in 1980, gold price had actually gone up from $35 before Nixon closed the gold window to $800 US. And then Paul Volcker in 1980 decided to raise the interest rate to almost 20% in order to kill inflation, in order to encourage people to save more and spend less. And from there on, we were given virtually a 28-year reprieve, because the way I see it is 2008, when the subprime crisis really hit the entire world, that was actually a sign that the system has already failed, that the fiat currency system using interest rates, the US dollar, and oil to back it up could not work, because countries were spending way too much compared to what they were producing. Individuals and corporations were borrowing more than they should, and the projects that they have been investing in basically were not actually paying off what they would promise in terms of the interest payments on the loans. Now, if you have noticed in these recent, especially these past 10 years, the culture has actually changed very much from a saving culture to a borrowing and spending culture. And it's actually no coincidence, really, if you actually see the bigger picture as I'm painting now. You have to actually consider that the media, what we would see on TV and what we read on newspapers and what we grab from the social media, these media corporations are actually sitting comfortably with banks. In fact, a lot of these large banks and investment companies are major shareholders or have significant shareholdings of all of these media corporations. Now, it's not conspiracy theory. You can just go and look at the company's annual reports and have a look at the major shareholders. Now, some of these shareholdings from banks are not necessarily implying that the banks own it, but it means that the banks are holding the stocks on behalf of its investors. Like some banks offer investment funds as products as services to their clients, and when they invest with the bank's managed fund or a large investment house, the individual investors are not going to be making this. They don't have that activist mentality, and therefore they're not going to be going around telling the media companies what to do. But the banks have the shareholdings in order to do so. And naturally, if as a media company, you're going to serve your master and you're going to try and advertise more so to help their business rather than to help the general public. So if you look at, for example, what banks that are currently now advertising more so is that they're offering easy access to credit cards. They're offering low rate home loans. They encourage you to borrow from them by offering you nice little trinkets and rewards or frequent flyer points. Just basically things that lure people into spending, but then there is actually a big hook underneath it all, because you've got to make the payments from principal. You've got to make the principal payments and the interest, and since most people probably will end up spending more and not keeping track of their spending, they're going to end up paying off their loans longer. This is especially the case when you've got online banking and also an increasingly cashless system. Nowadays, you have young people buying cups of coffee and just tapping their card using PayWire, and it's really cool. They make it. There's this thing about image that makes finance actually very sexy, because normally people wouldn't talk about credit cards as people do now, until you go, well, look at this. I can actually just tap my card and then I'm done. I don't have to actually fish through my wallet for the right note or the right change. And what is also better is they get celebrities as the faces and the personalities as the ambassadors for the banks. And what more is it that these days we have the media cult personalities. We follow this whole culture of the celebrities pretty much run our lives. Not so much they run everyone's lives, but I'm quite confident that the majority of the general public seem to have this admiration for media personalities, because they're familiar, they appear to be successful, they play certain roles that are easy to relate to, and there's this air of superior morals about them, even though, of course, we know with a lot of gossips and news articles that their lives are anything but. Now, the thing is, from there, these people are basically completely captive to the banks and the media and whoever is making profits off them. Because it is so easy to be lured by the whole world. Everyone else seems to be following this, and not many people actually like to be the odd man out. There seems to be this belief of safety in numbers. On this topic of media cult personality, I also want to bring in this almost paradoxical and insane way of living. Have you noticed that when you go to buy clothes or makeup, or you choose a car, most of us may make decisions based on who our favorite celebrity is and what brands they support. And we also seem to have this attraction towards branded goods because it appears cool. And this is where I have an inherent problem with them, because we pay to look like a celebrity. We want to dress like them. We even want to take haircuts like them. We might actually want to style ourselves like them, attend their concerts. All of these we actually pay out of our hard-earned savings or borrowed from a bank in order to emulate the lifestyle and be part of the cool group. We identify ourselves based on similar interests. But at the same time, have you noticed these celebrities get paid to eat from these products from the companies, to wear their products to promote it, and also they get paid when we attend their concerts or we watch their movies or we buy their merchandise. It's almost insane, because if I buy a really nice say Gucci shirt, or wear a really good Romano Guildo Segno suit, I'm actually advertising for that brand, but I'm not getting paid. I actually had to pay extra relative to if I go and buy a generic shirt without the brand label on the front. So what gives there? I just don't get it. And it's this aspect where it just defies logic. And often people might actually be doing it without knowing it, and when it's pointed out to them, then they suddenly go, "Well, why did I do that?" It's actually still, we pay for this, and often we actually make our lives more difficult at the same time. Now, one last point to just wrap this whole episode up, and we're going to continue later on another aspect. Have you noticed that the successful people, like the government officials, the high-flying corporate executives, founders of businesses, the pop stars, actors and actresses, etc., they seem to actually know each other. They seem to be connected with each other. And you're going to say, all right, now it's a conspiracy theory, right? As I said again, those two words are just empty. Have a think about it. Just think logically. They're connected with each other, and they seem to be working together to get you to spend more, to save less, to make irrational financial decisions, and they actually gain from it. That's the problem I find, and it's absurd that I found it really absurd when I thought it through and realized it was actually that simple. If they're all that connected and there is a common motive, what is actually behind all this? And as you now, if you want to dig further into the internet on things like QAnon posts and also listening to various what they call now alternative media, there's actually an increasing movement to reveal things about this. And as much as your mainstream media continues to tell you that these are all fake news, these are all conspiracy theories, and it's fear-mongering, just consider, what if the alternative media is actually right, and that these people who we've been following and that we've been handing our cash to and we're giving them all the admiration, they actually have gained from this. If the old media is actually true, can you see why the current established media and also the established group of people are trying to call these people out for fake news? Is because they're directly threatened. And I mean, closer to home, we are now starting to question, for example, why is it that the Australian government paid somewhere like $70 million to the Clinton Foundation, and now after the US election, when President Donald Trump won the election, the Clinton Foundation suddenly closed down, and you now also have the government starting to investigate and reveal that the Clinton Foundation has been involved in frauds around the world. What about the fact that we now have our potential Royal Commission on the banks, on our big four banks, on their lending practices? The fact that the reason why we have banks being able to generate record profits is, number one, they don't reduce the interest rates. They don't pass the Reserve Bank of Australia cutting interest rate completely on the mortgages, but they do so on our savings. And at the same time, there was this burgeoning growth in the mortgage lending industry, and that was only propagated by what people have now come out to and said that it's liars' loans, as in all these borrowers who were granted mortgages were inflating their income. The brokers were actually encouraging them to pad their financial position so that they could get bigger loans, and then they could go and bid in the property market, and therefore the banks own a larger mortgage portfolio and earn a high amount of interest. Now, one final thing I also want to talk about is, do you believe that those who have a mortgage on their home are actually homeowners, or are they not? The question is, look at who has the title deeds. The bank does. So, in this episode, I hope that you take a bit of time to reflect on some of the insanities relating to the way we actually think when it comes to money and finance, the things that we're being taught about how the financial system works, who is actually teaching us, and what is it that they gain from it. And perhaps you can dig further into some of the background that I provided you about. There is a reason why it's important to know your history, is because those who do not know their history are condemned to repeat it. So that's it from the Sydney Contrarian for this episode. Stay tuned for the next one, and for now, God bless.